Ladies and gentlemen, yes, I am talking about you. Welcome back to the channel. We have to go over everything SoFi that you guys need to know. The option flow sentiment, the short interest. We have to go over the major catalyst for this week because we have one major catalyst that is going to send the markets down or send the markets up in a substantial way. We're also going to be going over how important it is to stay invested in SoFi if you believe in the company for the long term. We're also gonna go over my position in SoFi for full transparency here in this video. So drop the like on the video if you own at least one single share of SoFi. This is a roll call. I want to see how big and how strong the community is at the current moment. Thank you guys for watching. Subscribe to the channel if you guys have not already, and comment down below how many shares of SoFi do you own. So let's dive into this. First and foremost, SoFi on Friday was up 2.77% and after hours down 0.34%, only 4 pennies. So not a big move down in after hours, and I don't think that is telling us what is going to come on Monday. Now, as we do know, SoFi has been beaten into the ground, so we really need to get back up to about $14-15 prior support levels and break out of that. That is going to be resistance, but before we do that, we have to break out past the 20-day simple moving average, which has been a lot of resistance since mid-November, and that's sitting at $12.92 per share. So if we see a bullish reaction this upcoming week, or we see a bullish reaction upon earnings and we break out above the 20-day simple moving average, then we could be set to rally. Obviously, this is a long-term trade, yes, but if you can make some money in the short term, I don't think there's anything wrong with that. So I know I get a lot of criticism here about saying that I would like to see SoFi rally soon because there's a lot of money to be made on that kind of rally, and I do personally have some options in SoFi. I do not encourage options trading, but if you are somebody that does it anyways, like me, if you're a full-time options trader, then I don't think it's a bad thing to trade SoFi options, and it's not holding down the stock. I know I've heard that a lot. Options don't hold down a stock unless they are a lot of puts and they cause artificial shorting power, but options can actually increase a move to the upside, because if you have a $12 strike and the price of SoFi gets close to $12, if not over $12, the market makers have to go out and buy 100 shares to hedge their backside obligation to your option and buy those shares under their break even or under your break even. So if you bought a contract for the $12 strike that had a break even of $12.50, before the stock went to $12.50, market makers would have to buy 100 shares per option that is held on that strike to hedge out their obligation there. So that's a big misconception with a lot of people, that options don't hurt the stock. But let's dive into some of the other information that you guys need to know, including the option flow sentiment, which is 89% bullish over the past 1 week, 88 orders totaling $40.72 million. So I like to see what big money is doing, especially on a smaller stock that doesn't get as much coverage like SoFi. You're seeing big dollar amounts coming in on the option flows, and 89% bullish, 89% positive is unheard of in a small and mid cap stock right now. And you're seeing a lot of longer dated call options, a lot of shorter dated put options, like you can see a lot of July 15th put options. But if we could go back in history here, like we've covered on this channel for a while now, you're seeing a lot of 2023 and a lot of 2024 in between the $15 and $25 strikes that institutions are buying, Now, as far as the short interest, you're looking at 17.75%, which is getting very high. Current short interest, as far as the shares that are sold short, is sitting at almost 110 million shares. Cost to borrow max at 2.32%, share utilization at almost 58%, and days cover at 2.48 days cover. Yes, this is not a short squeeze trade, but the short interest being this high can definitely amplify moves to the upside when that upside move eventually does come. Now, before we get into the big catalysts that are going to affect SoFi, other peers' earnings, as well as the big economic catalyst that is coming this upcoming week, I do want to go over why staying in the market is so important. As you guys can see from this chart, from January 4th, 1999 to December 31st, 2018, this is fully invested in the S&P 500. You would have made 5.82%. Keep in mind, this was at the peak of the dot-com bubble in 1999, as well as December 2018 was a very bad month. This is a somewhat dated article, April 11th, 2019. That your annualized performance would be 5.62%. If you missed the best 20 days, your return was negative 0.33%. But it says right here, you don't have to miss many good days to feel the impact. The return went from positive to negative by missing the 20 best days of the market over the past 20 years. Putnam Investments found similar results by studying the data from 2003 to 2018. If you're fully invested in the S&P 500, your annualized total return was 7.7% during that time. But if you missed the 10 best days in the market, it dropped to a paltry 2.65%. And that is the same way for SoFi. You could be down on SoFi like I am, about 26%. We'll look at that in just a second. But SoFi could make that up in one day if it's some kind of big catalyst or just positive sentiment comes into the stock. They could make that up in one day. If you're trying to sell out now, buy back in later, do all that, you're going to miss out. Now, if you don't have conviction in your trade, you should not be in SoFi or any other stock in the first place. If you couldn't tell me in 60 seconds why you own SoFi, then and to a high school kid and make it make sense for them, then I don't think you should be in SoFi. So, or any other stock for that matter, if you can't do that with that stock. So that's really the thing that I wanted to hammer home in this video as well. Now let's move on to the catalysts that are coming for this week. We do have the big catalyst, baby. That is going to be February 10th. That is on Thursday. We have the inflation data that comes out. The inflation rate year over year, the core inflation rate year over year, as well as core inflation rate month over month. That comes out 8:30 on Thursday. So that's going to move the markets big up or down. I couldn't tell you. The estimated CPI number is going to come in at 7.3%. So if it comes in less than that, market participants are going to be very excited because it will mean the Fed maybe doesn't have to act as fast. If it comes in less than 7%, I think you see a very strong 1.5 to 3% positive day across the broad market. Everything would likely go up. Now, if you see this come in at 7.5% or even right on expectations, you might see the market sell off 1.5 to 3% because the markets are not going to like inflation that keeps rising. So that is going to be key, and that is the main focus of this next upcoming week. As you can see right here, inflation year over year expectation of 7.3%, month over month inflation of 0.5%. So some very large numbers there, and obviously the markets do not like inflation. And the only thing they don't like more than inflation is a hawkish Fed. So that's that. That's going to be the big catalyst as far as the earnings that could actually affect SoFi, because we know SoFi's earnings are still like a month away. It's going to be Affirm on Thursday as well, which comes at a very bad timing. It could be a double whammy here, but that's going to be a big one. Why? Because Affirm is in the same realm as SoFi. It's in the finance, it's in the lending space. So if Affirm gets good numbers and they see good demand, then that could translate into a bullish reaction for SoFi as well. It's a sympathy here, not really the best sympathy. Your PayPals or Squares are going to be better sympathies, but still, this could move SoFi in a substantial way. Other than that, you do have Take-Two Interactive earnings on Monday and after hours. You do have Peloton, Chipotle, Corsair, Lyft, as well as XPO Logics and Spirit in after hours Tuesday. You also do have Walt Disney, Uber, Taiga, Mattel, Sonos, MGM Resorts, as well as O'Reilly Auto Parts. That is Wednesday in after hours. And then, like I said, Affirm, Cloudflare, Zillow, Ayora Cannabis, Upwork, Bloom Energy, a couple more notable names as well Thursday. And then on Friday, nothing too crazy right there. Besides Under Armour, that could be an interesting trade nonetheless. So that's really what you have for earnings. Affirm could definitely move SoFi and the big catalyst as far as inflation is concerned. Now, if we're looking at SoFi being realistic here. How low could SoFi go? I think the lowest point, even if SoFi has bad earnings, you're going to $10 per share. But it looks like to me SoFi is priced for its worst case scenario coming on earnings. Like we talked about in the last video with Snapchat as well as Amazon, they were already down so much. So it's like there's not too many sellers left. So the stock ends up rallying, even if the earnings are not all too good. Now, I think SoFi's earnings will be great. If you take a look at this, this is Google Trends and just typing in SoFi here, you can see that SoFi's Google search trends really started to pop in Q3. That's going to be the era, the time period that we are getting results for right now. As we do know, last earnings report we got for Q3 of 2021 was this time period right here where SoFi's searches started to spike and SoFi beat on all estimates of their earnings by a substantial amount. That was this period. This period was Q4, and now we do see SoFi searches starting to spike again, probably because SoFi Stadium is the center for the Super Bowl coming up here in the next couple of days or so. And you've also seen a lot of those headlines about the fan that was beaten into a coma outside of SoFi Stadium, which is very unfortunate for that whole situation. Not good, but it's driving a lot of attention to SoFi nonetheless, and you are seeing that spike. So with Google Trends tend to be positive, the actual earnings results tend to be positive as well. I have found that to be a direct correlation and one of the best indicators you can go off as far as if a company's earnings are going to be positive or negative. So that is really all I do have for this video. As far as earnings, I do expect them to be bullish, and actually I do want to go over my position like I promised earlier in this video. Now for SoFi, I do have $4,740 of current market value, down $1,665 in total, down 26%. Keep in mind SoFi could make that up in one single day though, so not worried whatsoever. Average cost of $16.01, looking to get that average cost down to about $13 per share here, hopefully before earnings. Shares, 400 shares. Portfolio diversity of 10.78%. I do have some options. Like I said, SoFi $12.50 calls for March 18th. So this is going to cover earnings. Average cost $1.34, up $20 or 5% in total. So I think it could be really good if SoFi does rally. I mean, these contracts used to be $1,000. If they could even hit 300, that would be a good trade nonetheless. And I think that is very possible. When SoFi does report earnings, I personally think they are going to be good, and you're going to see a bullish reaction upon that. So that is going to be all for this video. If you guys found value or simply entertainment out of it, hit that like button for me, subscribe to the channel, as well as comment down below what are your thoughts on this video. Thank you guys for watching, and I will see you in the next one.